Good morning, everyone. Jazzy, you want to come on, buddy?
I'm here, my man. How are you doing, buddy?
Good morning, Jazzy. We're just getting up to 200 people right now.
Yeah, so we generally say we'll wait till about 5-6 minutes after that 10:30 time. So maybe we'll give a couple of seconds to a minute now for everyone else to join as they get their coffees and their orange juices. Or with our community, I know there's a few people that are grabbing some mimosas. I think next week that's what I'm gonna do, buddy. I went to the liquor store a couple of days ago. I forgot to get some champagne, so I'm gonna do that. Shout out to everyone who's coming on. Let us know where you're signing on from. Hello, Debbie Hicks, Todd, what's going on? Special coffee here in I love that. Chai. Somebody said, Jazz, don't forget to mention chai. I mean, I do my afternoon chai at around 3-4 o'clock. No alcohol till noon. Well, it's noon somewhere, I'm sure.
Good morning. Let's see if Sasha's online here. Peter. Good morning, gents. Are you guys here? I see you on. Is your audio up?
I'm here. If you can hear me.
Yeah.
And Peter?
Oh yeah.
Awesome. Guys, we got a lot of people coming on. I think we're getting to about 250 right now. In the last minute, it's really getting up there. Love it. Simos, maybe you can take your screen down for a second and you and I can chat for a minute and introduce our guest today, our distinguished guest. We're so happy to have these guys on. Some of you already know these good looking faces, but some of you don't. Wanted to start off by welcoming everyone to another edition of Brunch with REC. Obviously, Simos and I can't wait to do this live, as I'm sure that most of you are waiting for as well. But keep on letting us know where you're signing on from. I'm seeing Denver. I'm seeing some people really all over North America signing on. What's going on, Fernando? Hi. So another edition of Brunch with REC. Simos, what are you doing? What are you having for brunch today? Did you not make something? Last week you had this whole plate of croissants and fruits and eggs. What happened this week?
Last week was the inaugural. I went and I gave it the respect it deserved. I made my morning trip to the bakery. Amidst COVID, I was wearing gloves and masks, and I got myself some fresh croissants. But I mean, the truth of the matter is I'm a little fat, you know what I mean? So you can't be eating croissants every day.
Like not every day, for sure.
While not moving. So I figured to myself, I'll have a small bowl of this crazy granola grow cereal this morning. And I've been running on coffee since. So
it's funny because last week I told the community here as well that I generally don't do breakfast. I kind of break the fast, so to speak, around 11 o'clock-ish. But because it was our first one, I had a plate of fruit. But this week, I think my little 4-year-old, he's either going through a massive growth spurt or he's just a garburator. He ate up all the fruit. I haven't had time to go to the grocery store, so I'll be making that run after we finish up here. Shout out to everybody who's also watching on Facebook Live, and for the first time that REC's done this is watching on YouTube Live. And so shout out to all of our friends, the REC Nation, and new people to the nation. Wanted to just say hi to you. Please introduce yourself in the chat. Just a couple of housekeeping notes. For anyone who's new to the REC family, after the webinar is done, to make sure that you receive the recording of this Brunch with REC and upcoming invitations, as we are going to be doing this weekly, but we do tons of content throughout the week that speaks about what we're going through here, obviously, during the pandemic, but there's exclusive content, exclusive opportunities that are still presenting themselves. After you get off this brunch, please go to textreccanada.com. That's textreccanada.com. It's becoming one of the fastest growing text communities in the industry. But once you go to text@reccanada.com, you'll now be receiving all ongoing content from REC. For all of our friends and family that have been in the community for the last 15 years with us, we thank you for your support. Without you, this would not be possible. To receive recordings, you guys are already receiving them, but for some reason, if we're going into your spam, please take a second after this is done and just shoot us an email at info@reccanada.com, and we'll make sure, as Tyler, our air traffic control guy, is here, Director of Real Estate Concierge Services, he'll make sure, and thanks for putting the messages in the chat there, Tyler, he'll make sure that he gets all that cleared up. A second piece of housekeeping note.
Social
from last
distancing
week,
in his picture there.
yeah. I love that. His beautiful wife, his beautiful wife Cass, and she's due in a couple of months. So shout out to Cass. So if Tyler make those messages. Anybody new to our community, go to text@reccanada.com. Anybody that's part of our community that's not receiving our emails, just shoot us an email at info@reccanada.com. From last week,
I just want to say something. I'm getting personal text messages to close my blinds right now. Word up,
yeah.
Ben K-Fence. Ben K-Fence, thank you, sir. I'm going to close my blinds right now, bro. Thank you.
You know, we were laughing last week.
Angel, Simeon.
we were laughing last week that because of the community, like we were trying to fix Simos's mic during the brunch, and again, thanks so much for the support, because we know that we can try certain things with our community, and they're very, very welcoming to that. With that said, what we learned from last week, as you guys are putting messages in the chat, speak with each other. This is not the REC community. This is your community. There are people here who have invested for years with us. There's someone that will definitely be watching and listening to this that has never invested. This is the community. You guys get together, ask questions to each other. For the portion of our Q&A after we're done with these two handsome looking gentlemen that you guys see on your screen and we'll introduce in a second, please leave your questions in the Q&A section. Because what we learned last week, what happened is if you're putting them in the chat, they get lost in the chats. And so please, if you look at your screen right now, you'll see a Q&A section. Just drop your questions in there and we will take our time after we're done kind of the formal, so to speak, part of the brunch. We'll make sure that we get all the questions answered. Guys, I've spoken a lot. I have some tea. And so I want to give the stage, this virtual stage, to the two gentlemen that are, well, one's to the right of me and one's beneath me right now. Not obviously in actual terms, just on my screen. Peter, Sasha, why don't you start? Your name and who Greybrook is and what Greybrook does, because there's a lot of people right across now. I'm watching, seeing the notes. There's people right across North America. There'll obviously be someone signing in from India because of this face. I'm sure there'll be somebody signing in from Greece because of our two Greek friends with us. I want them to know who is Greybrook, because we know you guys, and you guys are one of the biggest private equity firms in the country, but I want them to hear it from the two gentlemen that we have on right now.
Yeah, I guess if people are going to be forced to listen to us for any amount of time, they should care about what either of us have to say. So firstly, appreciate you guys having us. Always a pleasure. I think last time we were able to do it in person, and then a great little brunch with REC, and today it's a little bit different. But for Greybrook, I'll give you kind of a quick 30,000 foot view. So as you mentioned, Jas, we're a private equity. We invest primarily in development-based real estate. So that's the vast majority of our business, where we invest in both development of all types, residential as well as value add, where we'll buy apartment buildings. So those are kind of our two primary strategies. We manage a little over $15 billion worth of nation value, so quite a large that encompasses over 60 individual development projects and or value add projects across North America. So we're fortunate on 7,000 individual investors in 32 countries, part of our partnership base. And Peter and I are effectively co-CEOs of the business and founders of the. I'll let him a little bit.
And just before Peter goes, I love that, because we heard from one of our community members. They're like, Greybrook must be huge because they have two co-CEO, they have two CEOs. So that's amazing. Peter, go ahead, my man.
It's because I have to fix everything he breaks. Only one of us does work. It's really the problem. Listen, I'm like 80% sure Sasha's not even wearing pants right now, so I don't know. So,
I love those memes that are coming out.
It's the best.
I mean,
It's
crazy. It's weird. No pants, but he's wearing socks. I don't even know what to say.
Yeah.
But quarantine outfit. Yeah. You know, it's interesting because when Sasha and I started the business 15, 16, 17 years ago, when you say it out loud, it kind of is crazy how long I've put up with him for. But somewhere along the way, we've managed to create a community of development-based partners that are some of the biggest in the country here in Canada. And I think the real lucky thing about what we've been able to do is we've been able to partner with some of the biggest and most well-heeled developers in the country on projects that have the largest economies of scale, but we've allowed individual investors to access these projects on a project-by-project basis with a very relatively low barrier to entry in terms of actual minimum cash investments. Because we have people who invest $10 million in a deal. We have people who invest $25,000 in a project, and people can use registered funds, RESPs, TFSAs, and all those things. And we've allowed them to partner with the biggest and the best. And I always say, like, the people who need your money to do a development may not be the people that are your ideal partners. If you can pick the biggest and the best who are financially well-heeled, and they're partnering with you not because they need your money, but because they want to have joint expertise with what we bring to the table, I think that's really been a winning formula for us for a number of years. And I think that's what separates development and the risk profile in development with people like that versus somebody with a shovel, a hammer, and a dream.
I just wanted to have Peter, now that you're at this stage of explaining kind of the Greybrook model, can you, because we have a lot of new people here, not just the REC family that knows you guys intensively, but a lot of people who are brand new to this passive way of investing. Can you talk a little bit about the vehicle and how the vehicle that you've structured, because you said we've allowed the individual investor to get in on massive JVs. How does one do that? So somebody can understand, okay, so I'm an individual investor, I have an RSP, or I have some liquidity, I want to invest. How does the vehicle allow me to do so?
Yeah, I mean, in the simplest of terms, we, our job is to create kind of a diverse development-based real estate private equity portfolio for our investors. But what that really means is we allow people on a project-by-project basis to decide, I want to partner with this developer, I want to co-own, because we're equity, we're not debt, this piece of land in partnership with these developers in this location. And over the next 3, 5, 6, 7 years, depending on the size of the project and the stage of the project, we're going to build a condo together. We're going to build townhouses, stacked townhouses, in some cases commercial, but mostly it's residential. And then from there, we essentially put up cash. We typically put up 80 or 85% of the equity. Our development partners co-invest 15 or 20%. But the good thing for us and our partners is that they can never be asked for any more money. There's no dilution mechanisms, and all profits are split equally between the developer and the investors at the end of the day. And our job is really to ensure that the developer executes the project, makes all the good financial decisions. And Sasha and I, we really make all these decisions lock, stock, and barrel with the development partner. So it's not like, thanks, we're going to put money over here, go away, Mr. Developer, I'm sure it'll be fine. We represent the investors and frankly our own interests as large consumers of our own product throughout the entirety of the development project. And all key decisions are made 50-50 with us and our partners.
I don't know how much. I think, go ahead, Sasha.
No, just to add to that, I think also, Simeon, from you mentioned RSPs, like one of the things about our strategy, and I know a lot of your community, the REC community, people on this web probably spend a lot of time actively managing the real estate, right? They're buying, they're buying properties, they're working with tenants, they're doing renovation work and things. Strategy is completely passive to the investors. So to the extent that you want to kind of put your money to work for you and not have to think too much about it. You can use registered plans, FSAs, you can use pretty much any vehicle that's available where you have liquidity. And it's a good way to not have to brain damage yourself about doing the work. So that's one thing that it's a passive strategy.
Now we've known you guys for coming up to a decade, and even myself, I just came to learn a little bit more about the healthcare division of Greybrook, and so not everyone here knows even actually that Greybrook has a healthcare division. Sasha, can you speak about that as well? So Peter spoke about all things kind of real estate. Can you speak a little bit about the healthcare division, because I think it's quite timely right now?
Yeah, absolutely. So Peter and I do have another partner. His name is Elias Bambakis, and Elias has been a healthcare guy his entire career. So whether Peter and I kind of focused on the real estate side, and Elias brought with him the expertise on the healthcare side. So we do maintain a portfolio as well in healthcare. It's something we primarily use our own capital for. It's not something that typically we open up to investors because the risk profile is a little bit different, obviously, than buying a piece of land. But we devices and healthcare services. So right now, as you and I were talking about, even a couple of weeks ago, one of our primary investments is in a company that's in the mental health space, operate over 20 clinics in the United States that treat depression, among other mental health issues, at a primary level. And as we're kind of talking about through the course of this pandemic, it's a pretty important area. And obviously we're pretty fortunate to be involved and continue to grow that front mental health services across North America ultimately.
Keep on putting it in the messages here, guys, where you guys are watching and listening, and we're starting to see some questions come in, and we will get to the questions. Make sure to leave that in the Q&A section. Now I want to kind of take it right down to kind of the micro level. How much, what kind of returns can someone expect? And I don't know if it's different when you invest on the healthcare side and when you invest into the real estate side. Can one of you just speak about returns? And obviously, I mean, there's nothing really guaranteed, but what have you seen in the past? What's the results that investors have seen? My family has invested with Greybrook, but I really want you guys to kind of speak about what returns investors can expect.
Sure, I can answer that. I mean, our goal is really to, on the development side, double our money every 5 years or so. So that's the general return profile. Now, some projects might not be 5 years in length. Some projects might be 3 years, might be 7 years, depending on number of phases, size of the project. But on a simple average annualized return basis, we're looking to make a net 20% on our money. And when I say our money, I say it because whether it's me investing, you, Jas, or anybody here, everyone invests in the same terms and conditions. Whether somebody writes a $5 million check or a $50,000 check, whether it's my mom or a stranger off the side of the street, we're all getting the same returns, terms and conditions, class of shares. And
we actually charge Peter 5, but at the end. But that's neither here
nor there. Makes sense.
It's not a bad move. Not a bad move. But and I think that's really important because people always say, what's the best deal? What's this? I mean, for us, it's all about creating diversified portfolio in what you do. And at the end of the day, the risk profile needs to match what you're doing. And a lot of the risk profile that we think involved in this stuff really has to do with illiquidity. And when I say that is that unlike a stock or a REIT, you can't just push a button and get your money back in 2 days back in your account. You have to wait until the project comes to completion. Now, completion can mean very many different things depending on what we think strategically we want to do. Like our plan is usually to buy property, develop, homes, townhouses, condos on it, and then monetize it that way. But we've bought land, approved it, and sold it. We've bought approved land just to build. We've bought land that we thought we were going to build and just approved and sold. So we're dynamic in what we do. And on our value add apartment side, I mean, I see a lot of people here from Quebec and Montreal. we have about 1,500 or 2,000 apartment units in Montreal, where we buy older buildings, we renovate them, we increase the rent, and then we sell them. And that return profile is kind of like a double every kind of 7 years. So you're looking at about a 15% simple annualized return on those. And obviously, the profile is a bit different on that, but it's also a bit of a different product.
I got a question for you, Pete.
Yeah.
You're explaining two different product lines, and they couldn't be more different from one risk profile or investment profile to the other. So although they're in the same class of passive investing and joint venturing, they are completely white and black, meaning one, you're developing into the future and you're investing into the future of a city in an area, and the other one, you're investing in the existing infrastructure and perhaps the lack thereof, where it's underperforming and behind the times. And you're going to do the value add and bring it to speed and to market rents and create a profit out of doing so. Is that correct?
Yeah, I think you hit the nail on the head. I think the most important thing for people to take away is that Sasha and I are looking to create value. And what I mean by that is that we're not passive investors where we buy an asset and we don't do a whole lot to the asset. And over time, we just get the benefit of appreciation, which exists in real estate, and that being our investment philosophy. We do want to take advantage of buying good properties in good areas and passive appreciation, but our active investment strategy means that when I'm buying an apartment, I'm not just buying to sit on it. I'm renovating all the common areas. I'm renovating kitchens, bathrooms, floors. It's development in a different sense. It's really what you said, is value add, but it's at the end of the day, whether it's development, and you're right, it is different than our apartment buildings. We are adding active value and doing work rather than just sitting there passively.
Thank you.
On the healthcare side, Sasha, is it similar kind of returns? Does it just work totally different? Because there might be somebody listening here that says, look, I've invested with you guys on the real estate side. I didn't know you had a healthcare side. I don't even know how that works. So how does returns work from the healthcare perspective on that division?
Yeah, it's a lot different. On the healthcare side of the business, when we do have opportunities that are available to outside investors, as I kind of said at the beginning, most of the capital that is in our portfolio is our capital, like Greybrook's money. And the reason it's that way is because the sectors are very, very different, right? So in healthcare, we're traditionally investing in pretty early stage opportunities. And as a result of that, the risk profile is much different. So when we do bring opportunities to investors, our investors on the healthcare side, we generally de-risk. Greybrook will make a very something where it's commercially successful. The risk profile is a lot lower. At that point, we would offer that at times to our investors. And I'd say that, by and large, the returns are, they can be in the high double digits at times, right? So but again, it's a very different business than buying a good piece of land, and so it's a little bit.
Okay.
I don't know how much you guys are hearing me.
Sorry,
No, go ahead, Simos.
Actually, only paid for dial-up internet, which is,
Yeah.
I'm gonna try something. So if you lose me, I don't know what to say.
No,
I gotta say,
so Sasha, feel free to try something.
Comments in real time, not just generally, but also to see where people are from. Because I saw a note from somebody in Kitchener, and like 9 or 10 months ago, we bought a property in Kitchener to build 225 townhomes on Ontario Street. Then I saw somebody in Thornhill. We have 120 townhouses we're doing in Thornhill called Evoke Towns, which we're planning on launching later this year. I mean, I think one of the things that probably most people are surprised to know is that, when you have 70 developments across Southern Ontario, we're in every municipality. We have 1,200 houses to build in Fergus, Ontario. We have properties at the corner of Yorkville on Avenue Road building $10 million luxury units. We built 2,500 units in Liberty Village in partnership with our development partners. We have stuff on College. We have 12 properties in Durham region in Oshawa where we're selling townhouses and homes. Bowmanville, Hamilton, Cambridge. Like, we're all over, and the diversification of opportunity and product type is really something that I think over time that we've been really proud of.
Can you guys hear me now better or no?
Much better, much better.
I just wanted to make one comment, like way back, but I kept cutting out. So Peter mentioned that, you know, one of the risks that we always think about is illiquidity. It's funny because in the normal course, when you invest in product like ours or in real estate in general, illiquidity is a big risk. Only in times like this, the illiquidity can actually be a benefit. So, you know, you see in the real estate segment when, you know, it's not people's primary source of liquidity, you don't see the same volatility that you see in equity markets, right? You know, around the world over the past month, you've seen massive volatility and massive sell-offs in equities. The real estate market, while transaction volumes decrease, obviously, price tends to be relatively stable, and that's just a function of it not being a very liquid asset class and not the first place people look when they need to create cash.
Well, there's also no imbalance. So sales volume came down 78% and listings came down 69%. So you still have the balance metric inside this market that although sales volume is down obviously due to inactivity because everyone's home, so did the listing. So nobody's listing while nobody's shopping. It's
you know what's interesting is that we've seen, I wouldn't say that we've seen our activity in our sales centers, which are obviously all closed, go to zero. I mean, we've had, like, we sold 5 townhouses in Oshawa last week in one of our sites. From the second week of March into the third week of March, we firmed up over 200 condominiums at the corner of Dundas and McCall. I think something like 230 or 240 or something like that. I think we only released, you know, 280 or something like that. And, you know, we're still seeing activity and buying. Now we're doing it through DocuSign. We have we build purpose-built rental buildings in major US cities. And we have a rental building that just, it's like literally occupying at the end of the month in Los Olas and Fort Lauderdale in South Florida. And we're doing virtual tours and people are signing leases. I think that one thing that I can't stress enough is that the people who have liquidity or job security or need a place to live or want to continue investing, they're seeing borrowing rates and they're seeing opportunities to essentially buy real estate cheaper today because of the lending rates than they could 8 weeks ago. So that is something that we're seeing people really want to take advantage of to the extent that they can.
And I don't know if this is cheating, but I clicked on the Q&A tab.
Yeah.
And there's a
yes,
lot
it is cheating. Yes, it is cheating.
Just okay. let's go into it, guys. Let's go into it.
Go.
You're gonna have to live with it because I did it. There's no undoing it.
For 15 years, I'm an angel.
So, but while we can wait to answer specific questions at the end, but I noticed thematically a lot of people wondering about COVID and impact on timelines, impact on construction, things like that. So, we should probably just touch on, in general, what we've been seeing over the past month in our market as it relates to just the status of things and how they're moving. So,
and Sasha, sorry to cut you off, Sasha. Can you just speak really quickly from the perspective of what are because you guys are talking to the biggest builders in the country. What are they saying right now during this COVID time? Are they concerned, or in terms of are they delaying even launching projects? What are you guys hearing? Because we get a lot of our stats from you two and your firm, and so I want to hear a little bit more about that.
Yeah, like I think a lot. I mean, a lot of times investors have asked for sort of in general. The unfortunate reality is there's no such thing as in general, because everything is very specific to the project and specific to the stage of development, specific even to the municipality at times, right? Some have more functionality than others. Some are moving at a faster pace than others. So those questions are always very specific to answer. What I can answer kind of in general is that, let's say construction as an example, that has been deemed an essential service by the province. So by and large, if you're in the process of building something above grade, meaning you're toward delivering a home, the construction has continued, and any permitting that's required to continue that process has been still in the works, albeit not as efficient, not as fast, but those things are moving. In most of our construction sites, we're seeing all of them actually, and we'll split up the US and Canada, but here what we're seeing in Canada, we're seeing things move forward at reduced levels of efficiency. Obviously, we've had to put in safety measures on sites. There was a time where obviously you'd have multiple people and multiple trades working in a closed space. That can't happen the same way, right? With social distancing and the different parameters that need to be put there. So obviously your efficiency and speed is not what it was pre-COVID, but we're still managing to move things forward on the construction side. Similar in planning, things that are in planning, depending on what it is that you are, what stage you're at and what you're seeking from municipalities, they may or may not be able to move things forward. So on the planning front, anything that the development teams are responsible for doing, using their consultants and the collaborative things, putting together submissions, working through plans, those things have been continuing because everybody's working, right? They're working every day, they're working from home. Obviously, when it comes to things that require the municipality, it will depend on A, the municipality, B, what it is that you're exactly requiring from the municipality. But by and large, we're seeing as much movement forward as you can expect through this period of time. So by no means have we seen a standstill. Things are absolutely moving forward, just at varying speeds, and it's all sort of dependent on what it is that you're doing. So
I think that's something that would surprise a lot of people, is that there's more things happening than the average person would probably think there's happening during development right now, right? And like Sasha said, depending on the state, like all of our construction projects are ongoing, and some have been, affected a little bit, and some, like where you're, finishing inside of houses, is slower just because of what Sasha talked about. But nothing has really come to a grinding halt. And all the consultants who are being pushed by the developers and pushed by us and needing to do work, like everyone here, they're working from home. So those things are all moving forward. The thing that probably has come to not a standstill, but a slower, is comments back from the municipalities. Like, we're still getting comments back, but all the statute, like the periods where they're obligated to respond in like 90 days or else something bad happens to the city, those clocks aren't rolling right now. But I've never seen a situation like COVID-19 is not developers' problem, it's not the city's problem, it's not Jas's problem, it's not Sasha's problem. It's everyone's problem. And I've seen more people come together in an effort to help, whether it's consultants, city, trades, than I've ever seen in the business, frankly. There's been more cooperation, sympathy, and willingness to work through things right now. And frankly, not just as a business person, but as a person, it's really quite nice to see.
Well, thanks for clarifying that it's not Jas's problem, because usually Simos blames majority of things on Jas. So I appreciate you clarifying that.
Well, we can't be 100% sure, but I hear you.
I can assure you this was created by Jas for the world.
I keep on thinking it's created, but I think it's created by Zoom, just so everyone knows. But different topic, different brunch. We'll talk about that. There's someone who's watching or listening for sure live, or going to be watching and listening to this recording, and thinks that the real estate market is going to fall, and I should sell everything that I own. I want us all to kind of speak to that. Simos, why don't you kind of talk about that a little bit, and then the boys can comment on that as well. Like, what's your thoughts on that? Like, oh my God, I should sell everything I own right now. It's falling, the sky's falling, and values are going to drop.
I think it's time for everybody to really realize what this is and what it's not. I know the boy said this is everyone's problem, and that couldn't ring more true. Every single person who's staying home, the reason we're doing this brunch virtually is because we're self-respecting human beings. We want to stay involved with everyone, but we know that we need to do it from a distance right now to stop this. The more people listen, the quicker this is going to be over. The only thing we're trying to do is stop the outbreak. We're not stopping a virus. We're not medical experts. All you're doing is sticking apart in order not to pass it on and overwhelm a city's or a country's healthcare system. The country just invested trillions of dollars to make sure that you stay home with as little impact as possible. We're printing money that's going to have an effect on our long-term economy, clearly. But at the end of the day, the more people listen and stay home and take this seriously, the quicker we're going to get back to business. No matter what anyone says, we're going to get back to business. Whether it's 2 weeks, 4 weeks, 8 weeks, 12 weeks, 20 weeks. Obviously, we want it to be in the next 2 weeks. It's not going to happen. Call it 4 weeks, 6 weeks. Whatever it ends up being, it's still not enough to take down an entire civilization's way of living. Is there going to be consequences to it? Sure there is. Are different markets going to take the carnage differently? Yes. Alberta, who is reliant on commodities, already saw the biggest hit they've ever seen, and they're going to suffer for a longer period of time to get back up after COVID is done. In Toronto, where we enjoy a services market and a tech market, we're going to have a much more rapid response to rebound. Why? Because people need to service all those industries, no matter what. Real estate follows real life. If you're in a market where people need to be or want to be, or whatever the case may be, up to 4 weeks ago, March 15th, we were on track for a record-breaking real estate year. Nobody created COVID. COVID happened. So it's an anomaly in the marketplace. It's literally somebody put a branch in your spokes of your bicycle. It instantly happened, and we have to deal with it. We don't have a choice, but that did not change the dynamics of the market. Meaning that somebody who came here to study is going to stay here and study. Everybody has to wait out the virus. Whoever came here to establish their tech company, they didn't invest $5 or $10 or $15 million to relocate to Toronto because of a better and more educated workforce, and they're just going to pack up and leave because COVID ruined their plans for 2 months. It is what it is. So everybody stop looking at it, because we don't know. If I can go get my crystal ball that I pulled out last week, but just relax. So the sentiment just has to relax. Relax.
Now, Peter, Sasha, are you guys what are you advising clients right now? Similar to what Simos is saying, is stick to the strategy of buying and holding, because all of us on this, which is, someone dubbed it the REC Hollywood Squares. So that's the name of this podcast episode when we do air it. Everyone here, part of REC Hollywood Squares, we own a lot of real estate. Our macro thesis is to buy and hold. What's your guys' thoughts about somebody saying that the sky's falling and I need to sell this?
I mean, I think, people who trade stock for daily gains, I don't know anybody that buys real estate for short-term spikes, right? So the strategy and the asset class is inherently a long-term investment, right? So when things like this happen, whether it's COVID, whether it was the financial crisis in 2009, whatever the exogenous shock to the system, emotions get involved. People get nervous, they get anxious, and as a result of that, it's hard for them to see through sort of the current cloud instead of circumstances. But we have to think about the fact, so Simeon, what you said, I think is very, very true. I think that from a macro perspective, the fundamentals of this market, certainly in real estate more broadly, but certainly in the GTA and Greater Golden Horseshoe, were great and among the best in the world going into this. We had an exogenous shock. We all have to adjust. We all have to deal with it, but it's a period of time. And whether that recovery coming out of this is 2 months, 6 months, a year, whatever that number is, I think that the fundamentals will prevail. And because you're buying something that has a long-term thesis, you got to stick to that thesis. So, people asked us, and I'll let Peter kind of comment on it, but people asked us as it relates to acquisitions, and we're actively looking at acquisitions. And somebody asked me, well, how do you do that? And I said, well, when you're acquiring a piece of land, you're selling something 12, 18, 24 months down the road. So I can't be looking at what's happening momentarily. I have to think about a broader macroeconomic context that I still think is intact, notwithstanding what's happened.
You know what's interesting is that I've had this version of a discussion many times over the last 15 years. I had it in 08, 09, even had it in 2011 when, you know, sales slowed down. We had it in 2005. Like, it's kind of crazy to think that like people's minds go to the world is ending so readily in a city that's growing so much, right? Like, we're not, you know, some small Midwestern town in, you know, wherever, nowhere America that nobody wants to go to. We don't want to have industry. We don't want to have diversified. Like, Toronto's a global city. And if you buy the world is going to keep growing in population and people are going to want to live in good places, I think that's one of the unique things that investing in the greater Toronto area, and frankly in Canada and certain major cities, bring, right? Our vacancy rates across the country in terms of available rental units is next to nothing. Our immigration is what it is because we don't allow it to be more. The number of people who want to be here is large. People want to open businesses here, the quality of the life that we offer. So those are the key long-term things that drive real estate. You might see short-term shocks, and that short-term shock might be 2 months, might be a year, might be whatever it is. But when you're investing over a lifetime, over multi-years, particularly if you're investing in listen, if you're buying real estate and trying to buy it for $1 on Monday and sell it for $2 on Friday, you're just in the wrong business. And if that is even possible, you probably don't want to be in that business because it's more vapor than anything else. And when it's funny because people, I've had, you know, we have 15 of the biggest developers in the country as our partners. Some of them are billion-dollar families. All of them are several $100 million families. And they all called me and said, okay, there's all this opportunity. Let's go buy stuff and let's go buy stuff at, you know, a cheap price.
100%.
I'm like, you know, it doesn't work when every single person in the industry is flush with cash and really wants to buy stuff and no one's hurting except for I Sasha and cheated on one of the questions and saw somebody talking about developers going bankrupt. That had nothing to do with COVID. And that happens all the time for various reasons that we can talk about specifically now.
And yes, we can. Yes, we can, because it's all over the news. We're not bringing anything out of the bag. We're referring to Crestford. Please do mention it. Finish your point, but do go back to Crestford.
And the moral story, is that the people who were in trouble before this, there's always some section of the development community that people don't know the difference between private communities and no-name developer here in some cases, which boggles my mind. Like, if you're buying a car, you know if you're buying a Mercedes or you're buying, you know, Peter's Vroom Vroom Special, right? And I'm not saying that specifically Crestford was that, but these are unique circumstances around projects and not around the greater industry. And, you know, their assets are coming up for sale. And I had 10 of our developers call me and say, oh, we should look at them and see if we can buy them at a discount. Like, well, I've got 10 other people who just said that. So I don't know how big of a discount they're going to be available at, particularly the locations they're in. So let's look at them as rational human beings rather than thinking that nobody else wants to buy these great assets.
It's funny.
And specifically to Crestford, it was a number of things that happened, but I think it was one common mistake that they made across their entire portfolio, which was they sold their inventory way too early before they were prepared to start construction. And the construction costs ran away from them. And they did something that I probably wouldn't have supported, which is they just kept going in an effort to try to fix it later without really a bridge to fixing it. And that's what got them here. I can tell you that I think I have a lot of respect for a lot of people that worked at Crestford because I know some of them and they're not bad people. I don't think they did this with malicious intent. It's what happened. But Sasha and I talked about one of their projects in particular about when they sold, we knew delays that weren't even necessarily their fault, but just the functional reality of how the processing applications have gone in the city of Toronto. And it was going to be impossible for them to build it based on where construction costs have gone. They're not sitting there saying, how do I make more money? Literally, these projects are not financeable based on what they sold them for and when they started. It's important to know that that is one of the biggest things that Sasha and I spend time on managing our projects. It's when we sell something, I know how close I am to pulling a building permit so that doesn't happen. That was something that 5 years ago and 10 years ago, was not as much of a concern. And if you're not always in the market seeing this, we see good developers with good reputations run into this problem.
So
Sasha, you wanted to add something?
I was just going to add that, we're talking about Crespers specifically, but as Peter, I think, pointed out, that over the course of our careers, we've seen some version of this happen quite frequently. Maybe it's not as newsworthy, maybe, it's people don't know about it, but if you're in the industry, you certainly know about it. And, when I speak to investors at times, people will say things like, well, Toronto's had a great market, so of course everybody's made money. That could not be more incorrect, right? Especially as it relates to development, because when you're buying a piece of land, which is essentially your inventory, to the point where 300 people have moved into their finished suites, there's thousands of decisions and thousands of variables. You can make the right ones or the wrong ones, right? So execution is everything. And even in the 15-year bull market that the GTA has seen, there has been plenty of carnage. So as it relates to real estate macroeconomic thesis, no question we're in one of the best places in the world, if not the best, from what the drivers are. But that doesn't mean that you're not going to, potentially have risk if the people at the helm aren't making the right decisions.
Why don't we jump into Q&A, because I know it's getting full there, Simos. Maybe you can bring it up. I'm on my phone. I'm not going to be able to see all the questions.
Yes.
As you do that, just a quick reminder to any purchaser or investor. I mean, real estate goes up and down upwards. We all know that. But if you don't have the stomach, so if you're a first-time investor, it's going to go up and down. It will go up and down upwards. But if you don't have the stomach for that, don't do it. It's almost like being a goalie in a sport like hockey or soccer. You're gonna get hit by the puck. You're gonna get hit by the ball. If you're scared of that, don't be a goalie. And real estate is no different. It's gonna go up. There's gonna be some downs, but it's gonna continue to move up and down upwards. But if you're concerned, our advice to you, and everyone I think would share that sentiment, is just don't do it. Look at something else. Look at doing something else, because what we've seen is millions upon millions of people make money just understanding that it goes up and down upwards. Simos?
My man. So what I'm going to do right now with Q&A, I went right to the top. I'm gonna rip through them all together, and we'll stop when we see something that can answer the majority of people's questions. So I'm going to start right from the beginning, drop some positivity and confidence to the listeners today. Redevelopment as construction mostly has stalled. I think we really covered that. Sasha went into the fact that there's a lot more activity than people think.
I just want to say one thing, because someone asked a very specific question, two questions, one in Miami in terms of construction, and two, what Ford recently said. The change that Ford made essentially does not allow new construction to begin. So I have a demolition permit in my hand right now to knock over a building and start digging a hole. I can't start that. But if I've already gotten what's called an above grade permit, which means, I've dug most of my hole and I'm coming back up to grade, all that stuff continues. So what they're trying to do is not start new processes to have more people out in the field than they already need. Now, whether I agree with that or not is a separate discussion. And that is, to clarify, that's what's going on there. So it's not now it's stopping and the things that were going on are now recently stopped. That's not it. And I will tell you, in our US projects, the efficiency rate of our US projects exceed the efficiency rate of the construction of our Canadian projects. We have been less impacted on schedule for anything under construction in the US than we have here in Toronto. And some of our sites are operating at 95% efficiency, and some are operating at 60% efficiency, because interior wise, or getting people up into a hoist. I used to put eight construction guys. Now I have to have 2 on separate sides of the hoist in order to make sure everyone's safe. We're moving forward, but we're also doing it in a safe way. And what people don't understand is that if we ever had an issue at our site, that is the quickest way to stop construction. So these safety protocols are for everyone's sake. They're for the sake of the workers, they're for the sake of us, and for the sake of keeping construction going.
Love it. Thanks for that clarification. We have a message that
Love it.
came in as well. Yeah, thank you for that.
The next bunch of questions are Greybrook specific, so let's cover those quick, guys.
Yeah.
How is COVID impacting land development business? I think we've talked that, and we can make some comment, but give me 1 second. Quebec investors, do we still need to be accredited to invest with Greybrook?
I think
Susan from Montreal.
Yeah, I think at the moment that's the case currently, but we're working with the AMF, I believe is their financial regulator, on a solution that might change that. So hopefully within the next 3 to 6 months, we'll have a solution that would broaden people's ability.
And one of the questions was, are we a registrant of any governing bodies like IROC or other stuff? We're a registrant of the Securities and Exchange Commission in all the provinces. Like, we're registered in all the provinces, and we have a surrogate relationship as an SEC registrant in the U.S.
He's cheating too. He's in the
Yeah, he is.
He was chirping me for cheating. Meanwhile, he's like,
I have a big screen next to my computer here, and I can see like 15 questions all at once.
Does Greybrook offer any cash flow options on value add investments? So do you guys have any dividend producing funds?
Yeah, we have one. So the easiest way to think about distributions and value add is in the United States, and the things that we acquire in the United States, they'll typically have some form of distribution. So we have a project in Texas, in Houston, Texas, that is about a 5.25% sort of distribution today, and hopefully inclining over time. In our Canadian value add portfolio, for a number of reasons, from the intensity of the value add strategy, how much it costs and how much we're turning over, as well as the sort of low cap rates for acquisition, it's a little more challenging to produce cash flow. So if you're looking for sort of a cash flow producing vehicle, we'll make sure to get in touch with you when we have our US value add acquisitions.
And Sasha, as a Canadian, I can invest in the American projects?
Yeah, so we have developed a structure that is very flexible. So if somebody has US dollars, they can invest US dollars directly. If they would like to invest Canadian dollars and be treated as a Canadian from a tax perspective, so we can do that as well. So we have a structure that kind of accommodates everyone.
And I know Peter went over this earlier, but in case anybody just joined us a little bit later or didn't hear it, I can also invest registered funds, RSPs, RESPs.
Yeah, RSPs, TFSAs, all that stuff. And one thing that I should tell everyone, because this is the biggest question I get asked about investing in our US projects, you do not have to file income taxes in the US. You don't have to be a reporter in the US. We've created a structure that essentially is like a Canadian investment. It's a structure that is not uncommon, and we've built through KPMG. It's not Sasha Accounting Co. doing it. We've really made it quite simple for everyone to invest cross-border in that way. And even in an RSP, there's still going to be like no tax consequences, just like here, until you pull it out. And I get a lot of questions about should I invest this way, or should I invest like is it better to invest in my RSP or in cash or in a corporation? I mean, these are complicated questions at the end of the day, and they depend on where you have liquidity, what your plans are for the money. And those are some of the things that I know you guys can, and what we're set up to help discuss with people. I mean, because we're a registrant of all these different regulatory bodies, part of what we have to do is assess suitability, process, timelines, really have in-depth discussions to let people know what these opportunities are, how they can change, timeline, how they affect. If someone says, I'm investing in a 3-year project, and if I don't have my money back in 3 years, something bad will happen, well, then you should invest, right?
No.
And these are all part of it. If someone says, I have a lot of money, I want to put it into one project, I'm going to tell you, you should put it into 4 to 6 projects and different timelines, different locations, and development partners. Like, that's part of what our organization is built to do and deliver for people.
So may I add something
quickly,
to that?
Simos,
Go ahead.
just before you do, I just wanted to make sure everybody who's watching and listening that they understand that both myself and Simos are not licensed or regulated by all the regulatory bodies that Peter mentioned earlier. But we get connected with gentlemen like these two. So reach out to us. We can make the connection, all that. Like these guys their firm is one of the best firms in any type of industry. My personal family and friends invest with Greybrook, but I did want to make sure that everybody understands that both Simos and I are not regulated, and we can't sell this. We're not
Jas and
licensed.
Simos are regulated by the Organization of Handsome Men. That's their governing body.
Peter, you're so good for my ego. You're so good for my ego, my man.
So I wanted to cover that a little bit because what Peter mentioned is a diversification inside a specific category. So not only can you diversify in different asset classes inside real estate. So every time we do an intake, we call it good coffee with REC, or we call it a portfolio assessment, or we call it a sit down to go over your personal situation. Once you say, you put up your hand and say, hi, I want to invest in real estate. There's not one specific method that, okay, you want to invest in real estate, here's your money, and you've invested in real estate. There is income properties, there is condominiums, there's pre-construction, there's strip plazas, you can invest in hotels, you can invest in gas stations, in mortgage investment corporations, mix, you can invest in a myriad of ways to invest in real estate. And what Peter was just talking about is yet another layer of diversification inside the development. So if you're going to invest in development, which is a future forward, a future forward strategy, it's focused on the evolution of a city or a neighborhood. You believe that the values, if we create a building here, it's going to be worth more, and the market will be a better place for it in the future. When doing so, Peter said, oh, I have $1 million. I'm going to put it in this project in Oshawa. What Peter is saying is, why don't you stop? Yes, Oshawa is a great project, but take your $1 million, cut it into 5 pieces, 200K each or 20,000 each. I'm not talking about the number, but put it into 6 different developments. One is going to close next year and it's high rise. One is going to close next year and it's low rise. So you're now hedging your bets around the marketplace against different timelines. So in the case of a COVID, you're not caught in a COVID. Your whole asset base is caught in a situation that is out of anybody's control. So you invest against different timelines, against different buyers. The guys who are buying the low rise in Kleinberg are end users. The guys buying the 1-bedroom and studios downtown at Artistry condos are investors. So you're hedging against different strategies, you're hedging against different timelines. And that is how you build a well-rounded and low-risk portfolio that can still have very high returns.
Go ahead, Sasha.
I was just gonna, comment on, sometimes when people think about real estate, like you said, it's like this broad bucket. And then even when you separate the buckets between real, residential and commercial and industrial, those sub buckets are all very different. So as you pointed out, when you talk about geographic diversification in real estate, it means something different because one corner can be starkly different than another corner 100 meters away in the same city, right? Different drivers, different buyers, different demographic profile. And those folks who are buyers of that product in either case are impacted by different economic scenarios. Like the thing that I think about the most is when, those who are from the GTA or Ontario would know when the government came in with their B20 regulation, obviously around mortgage stress tests, or when interest rates go up by 25 basis points, that's going to have a different impact on a first-time home buyer, for example, than it is on somebody that's buying a $10 million luxury penthouse in Yorkville, right? So they're sensitive to interest rates in different ways. So that's why you can build that diversification at a very, very molecular level, so to speak.
I also want to say one thing that I think sometimes surprises me, how often people correlate these two based on the kind of investments they're making, which is about time and delays. Like I saw someone make a note, I bought a condo in Wasaga, I bought a condo from Menkes over here, they're going to be ready next year. Are they going to be delayed? You made those condominium purchases to make money over time. So unless you're talking about being in a situation where you have to live there, and that's different, and that is a functional reality of buying pre-construction, more time delay is actually why you bought the pre-construction condo in the first place, to make the appreciation over 3 years for it. So if a project was going to be delivered to you in 4 years, ends up being 6 years, you're still making the same investments. You get the same benefits for a longer period of time without having to carry mortgage or a tenant. So it's not necessarily a negative thing. And this correlates right back to Greybrook and our project. So sometimes you'll have a delay and say you have a report and you're 6 months delayed. Well, we haven't really updated our revenues and our costs in every instance. And it seems like we might be making less money on an annualized basis than we thought. But what I sold a condo for 2 years ago versus what I'm going to sell 2 years from now. But in the midst of all this, you know, it's sometimes difficult for us as Greybrook to say, you know, we're just going to sell it for more down the line. We're going to sell. It almost sounds that we're just using that to mask time delays, but that's part of why we are investing in the city of Toronto and growing city, because we believe in prices. We had a project in the corner of Shepherd and Willowdale that we had a counselor that, let's say, is not pro-development. Probably a counselor that is the most not pro-development in the GTA for sure, maybe on the newly discovered planet that looks like Earth 3,000 light years away, okay? And when we bought that property, we thought that we were going to sell a condo for $525 a square foot. And costs were what they were. Material delays in our zoning planning. We were successful and got our zoning. Now we're planning on launching sales for the condo this year. But they're going to be sold at, you know, 1,100, 1,200, 1,150, whatever number of square foot they're going to be sold for. Now costs have gone materially higher as well. So that's not all profit, but the total dollar profit that we're going to make more there is going to be materially worth the time it's been to delay. And I'm not saying that it always works that way and it's a guarantee, but in normal course, time does not always detract from values. And some of it is going back to diversification. That's why you want to have diversification, because sometimes time delays coming in the wrong times, the wrong situation can have some negative circumstances, but you create a diversified portfolio. And Sasha and I were talking, just because you can have fun with numbers your whole life, because stats could mean whatever you want them to mean. And we had a project, and someone asked, you know, what projects have been finishing and are finishing last year, this year. A lot, actually, probably like 7, 8, 9 projects between last year and this year that are finishing and paying out. And we have a site in Markham that right now people have been closing on houses, and we're wrapping up. You know, we still have some registration work to do with the city, so you know we'll see what that moves. But the project closed end of 2015 for investment. It's closing now. It's 150% net ROI to the investor. So every 100,000 that went in is coming out as 250,000 over 5.25 or 5.5 years or whatever. Albeit we thought it was going to be 3.5 years in perfect disclosure, but we thought we were going to make 70% ROI in 3.5 years. We're making 150% ROI in 5.5 years. And if you look at the stock market, you might have made a 20% ROI if you invested the day that came in and you were happened to be finishing today. And I'm not saying you would pull your money out, but some of these things are like the appropriate context to give people about diversification, risk, illiquid versus liquid, and what points in time can mean, right?
The one thing I just wanted to add to that is, you know, when you talk about time and value, it's almost a direct or indirect correlation. Like they're very related. So let me put it to you this way. If it was very simple to submit an application and get an approval, we would have 10 times more supply, and we wouldn't have the same fundamental dynamic where we have so much more demand than there is supply, right? So what's driving prices forward? I think nobody can argue the fact that clearly the supply and demand for GTA housing is in disequilibrium, right? There's a lot more demand than there is supply. Well, again, going back to timeline in the development process, because that's what we're talking about, is if it were so predictable and so easy to be exactly on time, well, then we'd have a different price dynamic, right? So on the one hand, yeah, you gotta give a little over here, but you're getting a lot of benefit for that over there. So that's kind of how we have to think about it. And it's not always easy to articulate. And sometimes when people are, you know, invested, we're doing our best to try to explain that dynamic. But as Peter pointed out, you know, in most cases, over the course of time, it's been accretive every year, right?
Yeah, and all of this stuff has dynamics around costs and construction costs. I get questions all the time. And by the way, our development partners have different thoughts on this, is where are costs going, right? I'm not sure where costs are going, but I can tell you that the real demand for housing exists. The limited trade supply that we have exists. And this is also part of what drives pricing, right? Do I think that the moment we can go back to work and it opens up, could there be this like very short window where a trade will give you a slightly better deal if they can go to work that next day? And that's a very unique circumstance, maybe, but the ability and the demand for housing is the same. And if we delayed building some stuff to some extent for a period of time, it's not going to ease on construction costs. It could do the opposite.
It's funny because
Peter,
a lot of buyers, like our pre-construction buyers, they a couple of years ago, maybe a year ago, they would read headlines and like there's a lot of foreign investment coming in. If you go to a sales office, you'll hear people speaking Punjabi and Greek and Chinese, but what we don't realize, they're from Brampton.
Buyers, come on, we know we're borrowing from Germany, please.
Hey, the Punjabi speakers are from Brampton. The Greek speakers are from East York. You know what I mean? And some of the Chinese buyers are from Markham. Like they're all here. The investors are here. It's not coming in. There's not a lot of money coming in from outside of our country. In fact, it's actually not even coming outside of our city. It's really
when they reported those results from the foreign tax in Ontario, and embarrassingly, they had to report that, after the first projection that it was 25% foreign buyers, it turns out it was 2%. Well,
in 15 years of selling every kind of product you can imagine in terms of in the GTA, I don't think that Sasha and I have sold more than 50 units in our careers to legit foreign buyers with 35% down. And by the way, of those, it was like 20 in one development because some group came out of nowhere that like didn't come back again, right? Like,
I love that you said that, Peter. We've done 1,000 units approximately in the last 5 years. I don't, Simos, you can maybe comment on it, but I've only done one with that 35% foreign buyer, one unit. I don't even know these people. Like, I don't know where they're coming, like where the government thinks they're coming from, or the media thinks they're coming from. But the truth of the matter is they're here in the city.
Well, we all know that, the media likes to sell headlines, so we can park that. But it doesn't sound like a great story when you talk about how many immigrants that now live in Toronto are buying housing, because that's not a good story. Who wants to hear that? But I kind of come at it almost the other way. So if you remember, I mentioned at the beginning, we have 7,000 investors in 32 countries. The question I get is, man, well, how do you guys have investors in 32 countries? Did you travel around the world looking for investors? And I say, it's actually quite the opposite. If you think about Toronto, it's one of the most multicultural places in the universe. And it all started with people in Toronto who are from somewhere else and have family members that may still be somewhere else. And they've been satisfied doing business with us and have said, hey, my brother-in-law, my sister-in-law, my father who lives in wherever he lives wants to invest with you. So the point is that we're one of the most multicultural places in the world. And obviously the narrative for many years has been immigration and how many people are coming into Toronto. So it almost blew my mind when, you're hearing all this about foreign investors, and I see so many people from wherever at these sales centers. Okay, but for the last decade, we've had 150,000 new people from all over the world come into Toronto. Could it be that these are the people that are buying units, right? Like, so it's not a surprise to anybody.
Guys, I'm going to slow this down for 1 second. The last about 20 questions and comments have been surrounding how do I get involved, how do I invest, etc. So let me make this very clear to our REC insiders. If you already have an existing relationship with Greybrook, reach out to your advisor. If you're brand new to the REC and you've never heard of Greybrook before, it's very important you get introduced properly. I want to give a big shout out to Darcy McGovney, Dylan Kent, who works with them, Alex, and the whole team at Greybrook. They do a tremendous job. This is a financial instrument. Again, as Jas mentioned earlier, we're not licensed to sell financial instruments. We can give you an introduction where you're going to be handled with respect to the process, the laws, and everything that's required for you to go through to get into one of these investments. Yes, if it's RSP, it has to go through a trust company that's self-directed. If it's a cash investment, you can get, but you have to qualify a specific way. There's a lot to it. So to all that block of questions of where do we see their opportunities, we will introduce you to the team. We've had an ongoing relationship for over a decade, so we know a lot about the process and how it all works. We just specifically can't speak of any of their actual developments because it's a financial instrument. You're going to have a proper conversation.
Thank you to Tyler. Simo, sorry. Tyler just made a mention of it. It's text reccanada.com. Once you fill out that information for anybody that's new to our family, what will happen is you'll receive a text message to your phone welcoming you to the community. Just reply back to that text. I want to speak to the guys at Greybrook. I want more information on anything that we spoke about, and then we can make the proper connection. Peter, you want to say something,
just
buddy?
To be clear, because part of what we are is, and someone asked the question how we're different from other organizations or whatnot. We have representatives in an office and people in Vancouver, because I know someone's out in BC. So we have people there. We have an office in Israel. We are 75 professionals deep just in our Toronto office here. And our job is not to be like a banker or someone who sells a product, right? Like, we are there, we have full development expertise, execution in-house, completely vertically integrated, and ability to do these things. So when we are assessing these opportunities, we're built to do them ourselves. So when we assess our partners and our ability to do that, we co-manage these things for you. That we are your representatives and our representatives in the project. And it doesn't matter what province you're in or where or what country you're in, our minimum investments are all the same, being $25,000. However, the qualifications, depending on where you live, could be a bit different.
Well, I love that you mentioned that, because Peter, I had, like, my brother, who's he's an aggressive investor. He met with you guys and he was ready to invest 100,000. But as you guys go through the process, he was told he's not able to invest 100 because you have to go through a process. You have to qualify. So how serious you guys take that, and you have to, because you're also regulated. It's very comforting knowing that. Sorry, Sasha.
We do. I'll just finish something there, and then I just wanted to make another comment. But we do that to protect investors. Like, we don't do that to protect ourselves. And I think it's important people need to understand that. You might be excited about a project. You might be excited. And at the end of the day, you put $100,000 in, and then 2 years later, something happens in your life and you don't have the liquidity. And now what, right? Like, this isn't something you could, like, as Peter mentioned before, you can hit a button and sell. So we want to make sure that people have sufficient liquidity, that what they're buying and investing in is right for what their objectives are. Like, it's all about aligning these opportunities in our strategy to what you're looking for, right? It's not like if somebody's 75 years old and doesn't care about leaving money to their estate and they just want to spend as much money as they can. Well, we're not going to put them in a 15-year Fergus type project, right? Like, that's just an example, but it has to be right for you. I wanted to make one comment, a bit of a change of gears, but I've seen a bunch of stuff on immigration, because we talked about immigration and sort of what do we think happens, in the wake of COVID. I think, obviously, do we think, and I'll speak for myself because Peter might have a different view, but, do I think that mobility is going to start right away? Like, do I think that the minute, whenever that is, whether it's a week or a month or more from now, when we return to some level of normal, I suspect there will be restrictions around movement for a while. So I don't expect the numbers to look the same as they've looked historically. But again, just like, our government doesn't look at things on a day-to-day basis or a year-to-year basis. We have a target for immigration that's a 20-year target. So I suspect that whatever we lose in a year will gain back over the next 2 or 3 years. And when you look at it on a longer scale, it's just going to be a different distribution of that curve. And that's because I don't expect Canada to be any less attractive. I don't expect there to be less opportunities. If anything, coming out of a crisis like this, the way we're handling it as a nation, I suspect people will be even further drawn to living in a place like Toronto.
I think that's so important.
I love that.
Because
yeah,
I got to tell you guys something. The quality of life of where you live is becoming more and more important every day. Sometimes it's geopolitical risk. Sometimes it's to protect money. Sometimes it's to protect your health. Sometimes it's to protect your beliefs. All of these things are something that Canada offers. And if we're printing money to help stave off some of these short-term issues, the driver to make sure that it becomes okay is to stimulate growth. And that is going to be happening through immigration. I actually expect immigration to increase for several different reasons. And maybe it's not going to increase on April 19th or April 20th, 2020, but a day, a week, a month, a year. This is going to be part of the government's program, in my opinion, in order to help stimulate growth to this country. And, you know, in the US, you know, we let our fair share of refugees in and all those things, but, you know, it's not the give me your poor huddled masses yearning to breathe free. It's give me your like educated, capable, and additive people of the economy, and maybe we'll let you live in Canada. And that's how we're building immigration a lot of the times is people who are additive, not just people who are going to take. And we have the obligation to do that as well, because that's part of who we are as a country. But
So Peter, I'm going to take, because you guys were able to take the conversation just to a little bit of a higher level, Lori Brazier, which is an ultra VIP client of ours. She actually just invested into Greybrook's latest project that Dundas and McCall. And she's a long-term investor with us, with you, but she has a question that's a little different. So I really, again, I'm going to address to everyone. We will be sending info on how to reach out to Greybrook. You're going to be able to get in touch. But I want to get into this really cool question. And I quote, "I know we are all here to make money. It seems that all of the developers are focused on high-end properties, but affordable housing is a huge social issue. Is Greybrook interested in affordable housing projects? Are there developers out there that would look at such projects? If I want to support affordable housing, who could I connect with? I'd like to hope it's possible to do so and also generate returns."
Great question, Lori.
yeah, I'm sure Sasha has some thoughts on this. And I'm going to tell you that is a political question more so than it is an investment question. And the reason I say that is that, notwithstanding what our politicians say and do, they're making it virtually impossible between taxes and government related expenses and planning timelines to actually create a new stock of affordable housing virtually anywhere in the GTA. Now, they'll tell you that they have programs that allow that will defer some development costs, that'll do this, that'll do that. These programs are not making it economically viable to do it on a large scale on a new development basis. In 2010 or 2011, I can't really remember now, all of a sudden they started charging HST on new housing. That's just an additional tax on the cost. That was straight off the top, that nobody didn't think about anything. And all of a sudden, as it's being a gradual increasing scale, I'm seeing that 10% of my revenue is going just to HST. It's crazy. Development charges account for, and government taxes, 25 to 30% of the cost of a building. And then I have land. So I'm competing with anyone else who wants to do a non-affordable project. So, and land can be, in today's, 15 to 25% of the cost. So somewhere between 40 and 60% of my costs are so high, and I'm not even talking about the construction costs to build. There's not a lot of programs that are allowing us to build any affordable housing on any kind of scale that makes economic sense. And I'm going to tell you guys something. There are institutions out there that are building brand new rental buildings that aren't affordable, that are doing it on razor thin margins because they believe in just having that asset over the long term. And it's not that there aren't people out there willing to do things on very thin margins. There's just, even for those guys, it's making very hard economic sense to do it. And without a major shift in policy or structure or legislation, it's going to be very hard for anybody in the private or institutional markets to deliver a lot of that. And that is why you're seeing some of these old rental buildings that can provide affordable rents to these people always have such high occupancy.
Yeah. Thanks, Peter. That's a really comprehensive response to the issue, I think. Sasha, are you able to dive into a little bit onto what can someone do? And again, like, feel free to take Peter's comments further, but if you can also get into, if you know, what can someone do to try to support affordable housing?
So, you know, I think Peter covered it. There's not a lot more that I want to add other than, you know, we've spent, both he and I, a considerable amount of time with our provincial government and trying to kind of look for solutions. So I'm not aware of any specific project or specific program that you might be able to get involved with. I'd be happy to look into that and get back to you, Simeon or Jas, with an option if I can find one. But it is an ongoing project. I mean, I think the development community realizes, you know, that there's a requirement for housing of all types. But I think it has to be a collaboration between multiple levels of government. So it's not a provincial directive. It's a municipal directive just as much as it's a provincial directive. And it's not always easy to align those from a policy perspective. So I think it's a true public-private partnership that eventually increases the amount of affordable options. And as Peter pointed out, you know, for the development community, which is the private sector, there are realities, there are economic realities. And this isn't a question of greed. It's not a question of, you know, making more money. It's a question of being able to do things in a commercially reasonable fashion, because it's not like the developer is going into their pocket and doing all this on their own, right? There's investors who expect a certain rate of return and deserve a certain rate of return given the risk that they're taking. So all of these things have to work together. And Peter and I both spent time with the provincial government in helping them understand better the economics of development and the financial drivers behind it, so that they can see and understand that this isn't a question about making more money. It's a question about making a base level of money that's required for people to be providing capital to development. And within that, what else can we do? And this is where the municipal government comes into play as well, in terms of potential concessions, potential rebates and grants and deferrals of charges and things like that. But we haven't gone far enough into that to find a solution in my opinion.
And they're trying. Like, the city of Toronto listed 3 great development sites that they wanted to do solely for the purpose of affordable housing, and restricted only for the use of affordable housing, which then would decrease the land value because it's only worth so much. And these sites were like, would have been, you know, AAA condo sites, and they're trying, and still the cost and all the other things, it was economically not viable to have somebody move forward with those projects today. So they're trying, but they haven't figured out all the programs yet. Even when the city is making these lands available, it still hasn't found a way to do it, and definitely not do it in a kind of material way to help solve the issue that we're dealing with.
The one thing I will say, and you know, it may lead to more opportunities in the future, I would say that in our discussions, this is as high on the radar as anything in terms of trying to find solutions. So it's not like the politicians are ignoring the need or, you know, what people are demanding. it's very, very high on their radar. And in most of the meetings I've had with the Ford administration and that Peter's had, it's like topic one, right, in terms of trying to solve the problem.
Well, thank you so much for that. I think we really covered it in depth. So I thank you for your personal perspective on it. And of course, it's something that it's again, just like COVID, social reform and how people live and their experience on this planet is near and dear everyone who's a proper human being and a proper citizen. Do I enjoy seeing people suffer through co-op housing shortages and living with cockroaches and all the things that take place in a broken system? No. So I do hope to see reform and change, and I do hope to see change in legislation that's going to promote the building of more housing and affordable housing.
By the way, sorry to interrupt you, Sim. I just want to tell you, because somebody made a comment. We do affordable housing in our projects, right? Like, so we have like 40 affordable housing stacked townhouses in our Downsview project, which was a drag on our pro forma and affected it, but that's not moving the needle. We did a deal with Habitat for Humanity in one of our developments. We gave Habitat for Humanity 25 units in our condo, and that's something. These are something that are done on a small scale when you mix it in. They're not moving the needle on solving the greater issue of, like, we need a lot of this stuff, right? So it's being done on a micro basis within private developments, but that's not enough to really move the needle in our opinion.
Okay, I just wanted to move to 3 more questions, guys, and thank you for elaborating again on that. There's a question here. It's moving the topic. Can Sasha or Peter explain to listeners what differentiates Greybrook's model from crowdfunding and syndications? Second, gents, in the LPGP structure, is there a redemption schedule like in a fund or not? That's from Hassani Brissett, and I know he's a capital markets guy. And lastly, do you, Peter and Sasha, have personal skin in the game on the projects that you promote? It would give investors a lot of confidence knowing that you're in the game with us. And I think that's a great question. So start anywhere. Differences between GB and crowdfunding syndication. Is there a redemption schedule in the LPGP? And do you have skin in the game?
Do you want to go first? Do you want me to go first?
Yeah, please.
Okay. So for the question of the difference between crowdfunding and syndication, I think that a lot of platforms are different, right? So I want to be careful around talking about sort of raising capital to invest in real estate as one thing. People do it very differently. In the typical crowdfunding world, we're talking about little amounts of money taken from thousands and thousands of people. And there's really a financial intermediary. And what I mean by that is, in almost all cases that I'm aware of, if not all, what's happening is this platform is aggregating the capital and it's basically investing it with the developer, and that's kind of the end of their role. You then, as the investor, are directly invested with the developer, and it goes where it goes. The biggest difference between who we are and who some of these folks are is we have a much more in the sense
Simos, maybe just put your mic on mute for a sec.
That's okay. We have a much more high touch model, so it's not thousands of people in every investment, and we take a very personal approach in making sure it's suitable and that it fits and all that stuff that I don't know happens in every kind of crowdfunding type thing. And then also, as Peter pointed out, our job starts at that point. When the investment's made, we have an entire business built on doing the work, making decisions, protecting our capital. So our job really starts the day that we make that acquisition together with the developer and ends when people have their money in their pocket. So that's a very different model.
I think that's very true. And those are platforms that connect people. They could, like, that's what those are. The developer is saying, I need money and I want money and I'm going to get it. And no one is saying, this is a good or a bad, or it's vetted, or I know these things, or I'm going to manage your interest. It's like the same thing as getting an Uber driver or Uber Eats or connecting with something online. Like, they're a connection platform. They're not an asset manager like we are, who vets opportunities, people, creates these documents, manages these things, represents our interests throughout the entirety and has a whole team of people whose sole job it is every day is to go ahead and make those decisions and oversee everything as we go along. Like, this is not it's a passive investment. And this is the kind of the joke that I make with everybody, because at any point in time, my family and I literally have $15 million or more invested in all these projects on the same terms and conditions as everybody. And it's a passive investment for everybody but Sasha and I, because we're working on it every day, right? Every day of our lives. Like, people think that we're just, because of what this community sees, it's investment, close, and then I just get my money. That is like, it's not even the iceberg where like 90% of its mass is below the surface. It's like 99% of the mass of what we do is below the surface that people don't see every day. And our infrastructure is built to do that, and manage it, because that's the only way to have long-term success. It doesn't matter, like, interest will diverge, change will have. I always tell people, and Sasha and I have this discussion all the time, we sit in the most unique seat by having 15 of the biggest developers that are our partners. We know what they're building for, how they're financing, strategy, stuff. 1 year at Greybrook is like a dog year. It's like 7 years or 10 years. And we have so much real-time information all the time to make qualified decisions. A lot of time we sit on the forefront of all this stuff, of what's going on in the market. News reports and stats are talking about the past. We're seeing it happen in real time, and it's so much scale. I mean, we have $15 billion of development going. That level of infrastructure knowledge and real-time action is something that, yes, I could go put in a small or a big amount of money through a platform. That's completely different than a multi-billion-dollar asset manager, who, by the way, and Sasha has many millions of these projects as well, him and his family. This is where we started as the largest consumer of our own product.
Well, at the beginning, nobody would give us any money because we had no track record and we had never done this before. So other than Elias, our partner, who was crazy enough at the time to say, hey, yeah, I'll put a few $1 million in. It was our own money, and then the next ring out was our
own money, because you and I had no money back then. But now it was Elias's money. But now it's our own money. Good point of qualification.
So it became the next ring out was, well, literally our parents, our brothers, sisters, uncles, aunts, like the people you trust the most. And then once it started to, show success and have a track record, it expanded beyond that. So the answer to whether we have skin in the game, the answer is basically everything I have is in this game, right? And for myself and my family and my partners, we have a tremendous amount of capital in the projects, and obviously,
if I ever want to go to Greek Easter again, I better work out, or else I'm going to be eating alone at the table. Can't talk to my brother-in-law or my in-laws or my parents, my yaya.
I think it's important. It's important to mention that you guys said you have also your family in it, because we get the question all the time as well when we're working on a project and doing 20 units at a time in the building. That, hey, did you or Simos invest, Jas? We would like to invest in all of them, but qualification and having down payments. But I could tell you that in each of our projects, generally speaking, and I think we're like 95% of the projects we've done in the last 5 to 6 years, either myself or Simos did actually invest in it, or our blood relative, like a brother, sister, or someone from our staff did. Because look, we get 50 projects at our desk every single year. We only get loud about 8 to 10 of them because we don't believe in the others. They didn't pass our due diligence. Those 8 to 10, we do want to get some skin in the game. And I'm glad that you mentioned that.
All the time, like, what percent of the capital do you invest in every project? I'm like, well, I buy $500 to $800 million worth of land every year. So, about 50%.
Yeah.
There's well, it's scale of the matter. Is it material to me?
It's funny because I get that question a lot, right? Which is somebody like, they say, okay, but are you investing in this project? And I always say, you're asking me the wrong question. And they kind of look at me perplexed. And I said, what you should be asking is, how much is my father-in-law investing in this project?
That's the guy.
Great question.
If I have the marbles to put him in the deal.
Yeah.
I want to just remind everyone that it's past 12.
I was going to say, Simos, put your audio down slightly because you're burning everyone's ears, I'm sure. Love you.
Sorry.
We'll take one more question, but while we're just asking that question, for everybody who's watching or listening, just give a big thanks, write a quick thanks in the chat for the time and the knowledge that both Peter and Sasha brought to us during brunch today. As I mentioned earlier, these are the guys that we go to as well to get a lot of our data. And so I hope everyone found it valuable. I know I did, because I picked up on some things, as I always do with these two guys. So please give a quick thanks, just write a little thanks if you thought it was valuable. If you didn't and you think they sucked, you can say that as well. That's up to you. They're big boys. They can handle constructive criticism, but we would love a woohoo and a thanks, because obviously we need to do this virtually. They would have got a standing ovation if we were doing this live, as they always do, but a thanks and a thanks. I see them all coming in, so I know that was valuable. Simos, you get to pick the last question that gets asked today for brunch, buddy. Go ahead.
And if you wanna say that I was slightly better than Peter, nobody's stopping you.
Sasha, I'm going to tell you that you were a lot better than Peter today.
Thank you.
You are a god. You are the best panelist I have ever seen in my life.
That makes me feel so good. So good. Does his head fit on the screen anymore? Did Sasha
No, it doesn't.
And while you're picking, since you're still choosing the question, Simos, again, we asked the question last week. Do you want us to continue to do this? We got guest lines lined up. Keep the messages coming to us through any social platform, Instagram, YouTube, podcast platform on this message. Let us know if you want us to continue to keep on bringing panelists, and we'll keep on asking. Just let us know. It's my birthday in a couple of weeks. Someone just said it's their birthday. I think we owe them something.
It's my birthday. It's my birthday coming up too, and I'm going to be under COVID, so I don't want to talk about it.
It's your birthday in a couple of, it is your birthday in a week.
That's right.
Go, buddy.
For the last question, I'm going to go live to the person, Mr. Fernando Vasconcelos. There's a few panelists with their hand up. Because we've gone over so long, we're not going to be able to do as many as last week. Let the last question be Mr. Fernando Vasconcelos, and I'll let you on now, Fernando. Fernando, are you there?
Live.
That would have been so cool.
Oh, he's here. He's here. Fernando, just and try to see if you can press your camera button. We would love to see you. And if not, that's okay, but try it.
Working on my cell phone.
No problem. We brought you in. We brought you in, Fernando.
There it is.
There you go. Ask the question. What's your question for our panelists today?
Okay, I've got 2 properties in Angus right now, Ontario, that are rented out. I've got pre-construction, Georgian Sands in Wasaga Beach by Elm Developments, closing presumably September 2021. Also have a pre-construction by Menkes in Novelio, presumably closing in the spring of 2023. Now, because of COVID-19, do you predict any delays, and by how much time?
Yeah, I mean,
Good question.
I talked a little bit about this. I saw your note, so I said that, I think delays is part of the reason why I think you might have bought them in the first place. But it's hard to really say the timing of delays today. If you ask me, every project is different, and I can't speak to those specifically, but stuff that is in construction, I'm not seeing a material delay today to completion timelines, meaning, I don't know if you would count 30, 60, or 90 days later a material and immaterial delay based on, you buying these many years in advance, but I haven't seen a 6-month delay based on what's happening. I haven't seen a 1-year delay based on what's happening. Do I know what's happening at those projects on the ground level? No, and I only know one of the developers quite well personally, and I can tell you that Menkes is a very organized professional organization that really know what they're doing. So whatever the delay is, it's definitely going to be as little as possible, but I haven't seen something that's caused a many-month delay to date to construction. Now, what happens tomorrow is everyone's guess, but that's not what I'm seeing today.
Simos,
thank you, Peter.
Let's get Sasha on the spot as well. Let's bring in one more live question, because I do love that aspect of our brunches.
And charge more for live, by the way.
Yeah, I know.
And sorry, before you say that last question, I just want to say, because like a lot of this dovetails into like what we're seeing. We are looking for new opportunities and think there are opportunities to take advantage of, let's say, today. And that's something that we're seriously doing. And we do expect to have stuff available to invest in sooner rather than later, because the opportunities do exist out there.
Amazing. Thank you, Peter. And Fernando, does that answer your question, pal?
Yes, it does. I know
Thank you very
beginning stages, but we'll find out as time goes on.
Thank you for your patience of hanging in the waiting room to get that question answered. Again, there's about a dozen live. We're not going to have the time. We are going to get this. We're going to take one more, as Jas said. But guys, email in or put your questions in the Q&A, and we will reach out personally. Myself and Jas make every single phone call to every single inquiry out of these. That's our commitment to our insiders. So put your questions in and we will get back to them. So I'll just get Fernando off. Thank you, Fernando. We appreciate you.
Thank you very
much. 1 second here, guys.
While you're looking for the next question, I don't know how many people that are watching have noticed Peter drinking a coffee for 2 hours. So yeah, he's the only person I know that starts the morning with an iced coffee and ends the day with the same iced coffee. It's actually
what is that all about? What's that all about, Peter?
I'm savoring it. I'm savoring it.
Nobody knows about the iced coffee and the frap, bro. It's okay. We're going to talk a little bit about Greek Easter after. I want to welcome Bob Schwarzentruber onto REC Insider and Coffee and Brunch with REC. Bob, if you're there, you're unmuted, pal.
Hello.
Hi, Bob.
How are you? I don't know what happened here. I was just listening to you guys, and now all of a sudden I've been called.
Oh, sorry. You
it's
must have raised your hand. You must have raised your hand.
You have a question?
Oh well, I did put a question in earlier, but it's whatever. My wife and I have been approved to invest in Greybrook months ago, and we've already talked to them. I had talked to Jas earlier months ago already, but anyways, we haven't heard anything from Greybrook, and we were just wondering if we should be calling them and kind of bugging them.
Yeah, so that's a good question, Bob. I think one thing that you'll find about our shop, first of all, happy to get Darcy or Dylan or whoever you've been speaking with to touch base and let you know exactly where we're at. Obviously in our business, it's not always, the cadence of deal flow is not always very predictable, right? Sometimes it can be one a month, sometimes it can be one every 6 months.
Right.
We're very, very selective about what we do and how we do it. So since the beginning of the year, we haven't pulled the trigger on an acquisition, although we have a number of them in the pipeline, and we're close on a couple. What I will do is literally, are you putting your hand up or 3? Okay,
3 or 2.
We're close on 3, a few apparently. So all of this to say that I'll ask your rep to just ping you and give you at least a bit of a status update. So it's certainly not, for us ignoring or anything like that. We haven't had any opportunities that have been current.
That's what I figured.
And by the way, we probably see 200 opportunities a year and buy, 5 to 12 of them, depending on the year and the size and the whatever. We're not. Right. We are not in the business of going out and deploying money. We're in the business of successful outcomes, and the very large lion's share of our compensation comes from sharing in the success of the profit sharing of these deals. So as everyone can go into a deal with rose-colored glasses, but having the experience of going through 75 developments over the last decade and a half, we know how some of these things can turn out if they're not the right starting point. And frankly, we're not obligated to do that. And at the end of the day, it's the one that you guys are involved in. So every development has to be a good development. It's not like it's, there's 10 of them, and if 8 of them don't go great and 2 of them don't, nobody sees the difference. Like we manage every one, like it's the beginning, end, and everything for somebody. And that's important for everyone to know.
Yeah, so a question we always get is, we do things deal by deal, as Peter mentioned earlier, one of us mentioned earlier. we're not a fund where you sort of invest and then we deploy your money kind of over time. And one of the main reasons for that, aside from being able to pick and choose the projects that you like, A, and B, it allows us to be a lot more strategic about how we combine different projects for each individual, so we can kind of tailor portfolios. But the bigger reason is that we're not pressured to put out money, right? So a lot of times when private equity firms raise a fund, you know, the meter starts ticking, the return starts ticking on that fund from day one. So obviously there's a pressure to put out that money and make those acquisitions. In our case, we choose not to do that because we don't want to be in a position where we're forced to buy things. We buy them when they're right.
Right. Okay, perfect.
All right,
Sounds good.
so
Thank you, my man.
Is the short answer.
Thank you very much.
And we'll make sure that as Tyler, our air traffic control guy, I know you've spoken to him in the past, and I do remember speaking to you personally as well. Appreciate your question, but we'll make sure that we're all on top of that. Thank you, my man.
Thank you very much.
You're welcome. Wow, guys, it's funny, we were talking quickly off air, all four of us, just before we broadcasted the brunch, saying, you know what, let's keep this under 45 minutes to an hour. You get us for give us for a mic and a platform, and we're about to touch 2 hours. I mean, I know I can speak on Simos's behalf. Everyone that was actually on this call, everyone who's going to be fortunate enough to listen to the recording. Peter, Sasha, like, we know how busy you guys are. Thank you so much for adding so much value to this brunch. You went way past that 45 minutes to an hour. You gave us 2 hours of your time. Thank you. Thank you. Thanks
for having us, guys.
Guys, really a lot of fun, and it almost felt social for a little bit there.
Yeah, I know.
So
well,
Simos
I'm socially non-distant from everybody, so I appreciate it.
Simos had a great. Go ahead, Simos.
I just want to thank the boys personally as well. I want to thank a huge thank you. We broke our last week's inaugural record. We crossed 300 today for some time. So I want to thank every single person who chose to spend their Saturday morning with us. We truly hope we were able to put your mind a little bit at ease. We're not dwellers of the COVID. I just don't focus negative energy. I want everybody on this panel to take a second and give a piece of advice to everyone at home as to what should you do today. Should you go to your backyard, enjoy the sun, give it a sweep, do a barbecue, laugh a little? What should somebody be doing right now? Let's get off real estate. Let's go human to human. Jazzy, where are you at? What do you want to tell everyone, bro?
I think I want to talk about being optimistic. It is definitely different than just having a positive mindset. You can go into your backyard and say that there is no weeds, and there's no weeds, and there's no weeds. But if there's weeds in your backyard, you're somewhat being naive. So be careful about being positive. But I implore you to be optimistic, because when you're optimistic, you're positive about the future, and that's slightly different than just having a positive mindset. And so I hope everyone here can start to think about and start to have optimism, because then you start to know that the possibilities are endless and the opportunities are just everywhere.
Yeah, I mean, obviously it's a stressful time for a lot of people, and an anxious time, potentially, but if you can, it's also time that we're all spending at home with our loved ones, whether that's your spouse, your partner, your children, whatever that may be. And it's time that we'll look back on, hopefully a year from now, thinking, oh yeah, I remember when, I was at home for 2 months and I got to see my kids on a daily basis. And instead of taking a break between calls and walking to a Starbucks, you get to take a break between calls and play with your kids, right? So that's time that we'll never get back, always in this fashion. And like you said, Jas, if you can be positive about anything, it's the ability to spend some quality time with your family. Notwithstanding, there's a lot going on and people are busy and working and stressed. There's always that downtime that you get to appreciate.
Awesome.
Peter.
Yeah, I agree. I mean, I have a now 5-month-old son, and the last little bit is time that I probably in the normal course would have not been able to do the kind of things, or at least see him with his face pressed against my office door. with my wife holding him, of course, during this time. And I think that like, I'm gonna use a sports analogy that, you know, I'm a Raptor fan, and a lot of people who follow their run across Canada might have picked up on is, you know, never get too high, never get too low. Like at all these times, like stay even keeled and stay rational, because sometimes it's very hard. It's very emotional. You're scared. It's not just about you. Usually you're not worried about yourself. You're worried about other people. You're worried about your friends, your parents, your family, all those things. Like most people innately don't think, oh my God, I wake up every day worrying about myself. They worry about other people. And I think just understanding that things happen in life and you need to stay even keeled in the good and the bad times is going to help you stay rational and make good decisions. And frankly, hug the people that you care in a socially acceptable way, in a date that we are allowed to do it with or without a mask on when you can, because that's something that is very important.
All right.
Awesome.
Jazzy, I just want to make one comment, and I want you to bring us to a close, pal. I want to just remind everyone, because there was lots of questions on the private side, like because you can pick the panels, etc. Are we presenting opportunities? No, this is not a sales call. This is a brunch with REC where we talk shop. Is there opportunities right now? Yes, there is. If anybody wants opportunities, Jas is going to close out and tell you how to reach out. Does Greybrook have opportunities? Yes. Everybody that's in this business is in the opportunities business. We create opportunities, we look for them, we sell real estate, but this forum specifically is to bring value and education and an understanding of what's taking place. For anybody who's seeking specific opportunity or needs next steps to speak to Darcy or to Greybrook organization, you will be in touch. Jas is going to cover one last time right now how to reach to us and get this thing closed off.
Sorry,
Peter, you go first. Peter, go.
Yes. All right, 1 second. I just want to say thank you to all the frontline healthcare, food, supply people. Like, holy shit. Excuse my language on a Saturday morning. Like, my wife's a family doctor. She's got a lot of friends that are physicians in the ER and whatever. This is like real scary stuff. You guys put yourselves out there. People at the grocery store put themselves out there. Like money, not much. Like this is something that cannot be quantified, cannot be thanked enough. And I'm going to tell you something. Like these are the people that are holding the world together right now, and literally wouldn't be possible without you guys. Like we whatever people can give, we've donated masks, money, time, initiative. Like thank you to all you people. Like this is next level stuff. I can't even explain it.
Great. I mean, we all grew up as watching Spider-Man and Superman and Incredible Hulk and the Avengers of recent, and I think everyone here knows that who the real heroes are. And so
and they're not wearing capes, are they?
And they're not wearing capes. Thank you. Again, thank you for everyone who was on this call and is watching the recording. To get in touch with, if you're new to the REC Nation, again, go to text reccanada.com. You have 2 C's in the middle there. Text reccanada.com. If you're already part of the nation and you have a question that did not get answered, just simply email info@reccanada.com and we'll make sure that we get out there. Simos said it's both Jas and I will be reaching out. Today will be more Simos. He's up more today, so I'm going to have him working later. But all kidding aside, thank you guys so much. Sasha, Peter, thank you to you. Thank you to your families for, allowing you guys to do this for a couple of hours on a Saturday morning. Shout out to the families. Peter, congratulations once again. I hope fatherhood is everything that you wanted it to be, my man.
A million times better than I could have imagined.
Awesome.
The plus for me is that his son's on like 50% of the calls that we have, like in the little background, and he adds like 100% more value.
Simos, I don't get to say it enough to you, my man. I haven't seen you in, I don't know what it's been now, 34 days or something. I love you, and shout out to your family as well. Shout out to Caroline. So, okay, love you. I miss you guys. And again, just reach out to us with any questions. We will see you here next Saturday. We already have a guest lined up. We'll release that information on Monday morning, I think. But we will be here again next Saturday, 10:30 a.m. for Brunch with REC. Take care, guys.
Take care, everyone.
Thanks.